and welcome to India Market Open. It's Monday morning and we're gearing up for another important week of trade. Fourth phase of election kicks in. Volatility is expected to be at its peak. Global cues are not looking very promising this morning, and bears seem to have a little bit of grip on the street at this stage at least. So a negative start, at least in terms of the implied open.
Yeah, I mean, just somehow because we had such idiosyncratic cues leading our markets lower, and so much of shorts in the system, plus the selling from the two global funds largely over. I don't know, if PM Modi's reiteration plus other things come to fruition, then we might well have a good week as the week proceeds ahead. Somehow, it's a bit of short covering if that were to happen. Could be really positive.
So global cues aren't all that negative. I would say mixed. US is okay.
Asia is a little weak.
Asia is a little weak. And in terms of elections, this is definitely an important week because it's sandwiched between two very crucial phases. Phase 4 is today, and you have phase 5 next Monday when markets will be closed. To which, of course, you'll see a response the following week. Also, and we'll go into more details on this on Editor's Cut. The phases now onwards are the important one. The business end, so to speak, of the election comes in as far as the BJP is concerned, because their key seats and their strongholds now go to vote. So we'll talk about all of that, and of course we'll play out for you that exclusive conversation that Prime Minister Modi had with NDTV in the middle of an election rally in Patna, where he reiterates the 400-seat mark. And that becomes important because that was the question mark for this market right now, that is it going to be 400? Though, as we've said time and again, you don't need 400, you need 273 to run a government in India. So 300, 320, 400, all vanity numbers in that sense. But you actually need 273. We'll come to all of that. Let me just set up the global cues for you and the global news flow for you this morning before we get into, what the trade setup is for the week and for the day. So largely positive as far as US markets are concerned, at least. 8th trading session has seen a winning streak. The Dow closed about over 100 points up. That sense that maybe there will be rate cuts this year is continuing. What was, I would say, a fly in the ointment was consumer sentiment data, which came in. The University of Michigan puts it out. And that indicated expectations of slightly higher inflation. Now, those expectations are from consumers themselves. It is what you sense or you think inflation is going to be. It's a household survey, so to speak. So that is slightly higher. So that's not too positive. It's going to be a wait and watch kind of a week because Wednesday you have key data coming out. The US CPI will come out for the previous month. The 10-year Treasury retraced a bit. It inched up high, but retraced and settled at about 4.94%. So nothing too alarming there. A couple of comments from various Fed officials, and this is something that moves markets consistently. Underlining largely, I'm not going to go into detail, but underlining largely that higher for longer is not a narrative which is behind us till now. And for crude prices, that's not necessarily a positive. It indicates maybe demand won't pick up as much as expected. So you had the Brent down to nearly 82 a barrel. So benign oil, good for us in terms of India. Asian markets, though, as Samina said, were not great, opened largely in the red and continue to be there. Inflation data, price index, which has come out in China, is a little higher than expected, so that's a downer. I would say mixed cues globally overall. I just want to pull up fund flows before we go to the setup, and I think a more detailed piece will be coming around on what the fund flows have been. All of May has been, seeing a spree of foreign investors selling. The provisional data from NAC for Friday was about 2,118 crores. DIS bought 2,710 crores, but overall, in the month of May so far, it's upwards of 20,000 crore rupees in terms of fund flow. So that continues unabated one way or the other. Is it a larger story? Is it to do with elections? Is it like, Niraj, you were saying that it's these two large funds which had to, sort of square off their positions, and are they done? Is a bit of a question mark.
Yeah, last week was certainly that. I mean, for the whole month of May, you can argue that from the starting of the month, maybe some bit of it was otherwise. But last week, almost every large FI dealing room that you speak to And I was with somebody on Saturday as well. Large week was entirely that. So there is thankfully no question mark. And if you just look at the short positions created on Thursday's session, for example, just look at the call put data and you will see the kind of call positions that were written on Thursday. Just such large short positions existing in the system that a whiff of short covering, which if it comes about, could actually lead to a significant sharp up move in the markets. I would dare say at the risk of sounding too bullish in a current otherwise scenario, just speaking to dealing rooms across would give you a sense that maybe some people are bracing up for that as well. So keep that in mind. Like Tamannna stated, FI sell number high, but very high for the last 3 days. Wednesday, Thursday, Friday. Wednesday and Thursday in particular, extremely high sell number. But most people say that major part of that concentrated selling largely over. Difficult to figure that out because FIs can lever up to 5x of their official position. How much is levered, how much is not? Very difficult for almost anybody to figure out. But most people say that that part of selling is largely over. I wonder if PM Modi's confident reiteration to the NDTV network about the political outlook also soothes some frayed nerves. So that's the third piece. And if this were to happen, independent of looking at what sector or what stocks have done well or otherwise, you effectively look at stocks which have gotten beaten down the most, which are usually first to party when a swing trade turns either side. And maybe that's the set of stocks that you look at. And we saw some evidence of that, right? In Friday's session, UPL, beaten down name, for no apparent reason, up 7%. JSW Energy got beaten down out of shape on the day of the results and afterwards, up suddenly 7 or 8% for no apparent reason. So a lot of these really beaten down names saw a bit of a swing trade in Friday. Let's see if some of them were to show that spunk this week as well or not.
Zomato as well. Had a pretty sweet rally on
life
Friday
highs.
And unexpected, right? There was no trigger or cue for that one. But Niraj, if I take your point on the index, fair point. We did claw back. There was some amount of reassurance. We closed about 22,000. But Bank Nifty, now that really attempted a pullback, failed. It managed to close 67 points lower in Friday's close. Of course, an important level of support is 47,240, and I think if that gets held, maybe a relief rally there could support the index. But it didn't happen on Friday. The hope is that if it happens over the course of the next few days, the support that the index is looking for is going to come through. And I think while everyone is so concerned and worried about what happened last week, this is not even the start of a correction. I mean, a 3% up move from record highs is nothing to be worried about. And the fact remains that it will be volatile. There will be profit taking. We've had very strong years behind us in terms of a positive up move. And we've constantly talked about valuation being a worry, but that's not caught up in the terms of what you're seeing in pricing, right? So while FIs have been selling, DIs have literally come in and supported the market as and when needed. But to say that we are completely out of the woods, I still won't go as far as saying that, because it is an event-based, and every time there's an event, and that's why you have the, I mean, I know we've been very nervous about the Wix jumping, but if the Wix doesn't jump at times like these, then when will it?
Yeah
you know, right. You've had Lehman, you've had 2014, you've had 2019. Of course, it's an election time. It's a big event. It has to go up.
And I don't think anyone will ever stick their neck out and say that they know for sure what's going to happen on June 4th.
It would be very silly and stupid of you to do that.
Yeah, but just one small point in the mix, because this was so much spoken about. And Friday, there was a 5-year celebration of one of the large asset managers, and the whole janta was there. And almost everybody was of the consensus view that while the market in its wisdom thought that, was it the lower voter turnout that was doing this trick? The informed people were completely clear that there was no connection to their mind of this voter turnout argument. It was effectively the concentrated selling that was happening in India, as opposed to a lower voter turnout that was really leading to something.
Yeah, and even talking about the VIX, while it is at levels at 18.4 is what I think it closed at on Friday. In 2019, on 17th May, it was at 28. In 2014, on the 9th of May, it was at 38. So 38, 28 and 18. So really nothing to worry about. But yes, I do feel like it's going to be range bound. 21,900 is an important level of support. We're hoping Bank Nifty comes through and reassures us that there is a little bit of strength in the market. But after a record high, some consolidation comes in as no surprise. Well, lots of stocks to watch out for, and some of them have been a good set of earnings. Tata Motors, so this is going to be one big support on the index, I'd like to believe, this morning. Good earnings, brokerages seem enthused. All in all, it's a good pack. They're now cash debt-free. That is a relief, and a lot of it working for them. PV, CV, JLR, domestic, internationally, margins have improved, top lines come in better. Operating performance is also very, very impressive. So they announced numbers, saw a threefold rise in demand. To just put a number to that, 222% higher in terms of top line. There was, of course, a tax credit surge, and that contributed to some extent to the top line, but the rest of the business also reporting very solid numbers. Like I said, margin expansion was seen on domestic and standalone basis, and from the big brokerages, you've had the likes of Phillip Capital, Nuvama, Elara, all actually seeming quite impressed with what Tata Motors has done this quarter. The stock performed really well over the last 2 days. Before it went into its earnings, Thursday and Friday was pretty solid. Expected to do a gap up, I'd imagine, if the market sentiment is supportive on back of good earnings. Kalyan Jewellers, that's the other one. Again, good earnings for them too. They've reported a 2 times jump in top line, coming in at 697 crores as compared to the same quarter last year. Revenue came in at 45,349, which is up about 34%, and margins have also improved. Their Middle East business is doing really well. That's contributed to 624 crores in terms of, the margins are flat on this one. But apart from the margin figure, the revenue and profitability is better than expected. Middle East, so your Oman, Qatar, Dubai have contributed well to Kalyan Jewels. 14% of the top line comes in from the Middle Eastern operations. PAT is coming at 9.9 crores, up 76% from 5.6. So all in all, good numbers. The stock was up 4% on Friday. It'd be interesting to see whether it reacts to these numbers or it's buy the rumor, sell the news kind of play that happens on Kalyan. Apart from that, the other one that I want to quickly pull up is a few other ones actually. You've got Thermax, but Dilip Bilkon. That was an eye-catching number in my opinion. They've had a pretty smart move in terms of the stock as well over the last couple of quarters. Lots of internal restructuring, focusing on core businesses, cutting down operational costs is what's helped Dilip Bilkon. And it's in the numbers again this morning. Revenues are up, profitability is up, margins have improved, order book is looking healthy. We will connect with the management at 12 o'clock this afternoon to get a sense of what lies ahead for Dilip Bilkon. But all in all, once again, a good quarter for Dilip Bilkon.
Yeah, I just on Kalyan Jewellers, I was just wondering the fact that gold prices have gone, through the roof would definitely contribute to their top line, but I'm not sure how much to their profitability. But nevertheless, a good set of numbers there. Samina, you spoke about Tata Motors. Eicher Motors is the other one that I wanted to talk about. In line largely, but brokerage notes are a little mixed on an Eicher. But on the face of it, numbers, nothing to complain about, so to speak. Margins up 200 bips, net profit up 18% as well. Citi says a buy. They've maintained a target price of 5,300, up from 4,600. So they see an upside of 14%. They're happy with the strong results. They say the outlook is positive, and the management is expecting a double-digit year-on-year growth in the middleweight bikes segment. On the other hand, MK maintains a sell with a 3,400 downside of 27%. So divergent there. In-line quarter, but growth concerns remain. Overall, Eicher has not done too badly, and I would say auto space continues to be in the positive territory in a relative basis, and we've seen that through a very volatile week as well. Finolex is the other one I thought we should look at. Revenues have grown about 8%, so I would say tepid set of results as far as Finolex is concerned. EBITDA was down close to 4%. Margins also down about 200 points, 200 bips, 214. And net profits are also mildly down, so you might see a bit of a downside coming in on a Finolex Industries. That space has, maybe on a high base, not done too well. Zydus Life could see an up move because of the approval they've received from the US FDA. It's a final approval for a tablet called dexamethasone, and it's used in a host of conditions. It has a $1.8 million USD market. And that would be a good bump up maybe for a Zydus Life. Couple of more, but I'll return to them. A lot of stocks always to talk about on a Monday after a weekend in results season.
In results season especially. But I don't know. I just think somehow ABB India, despite the 9% up move ahead of results, could well turn out to be the stock of the day despite the valuations as well. Because just look at the margin beat there. This is a company which operates in a space where margin expansion is difficult, and the revenues were up 27%, which is great, ahead of estimates, 3,080 crores. But the margins, 18.34 versus 11.83, and PAT as a result of which, for ABB, a company of that size, 1 lakh crore market cap, the profit after tax was up 87% at 459 crores versus 245 crores. Now, the interesting thing is, looking at multiple notes, the Jefferies note, they have raised the target to 8845, and they say that the stock, they are valuing the stock in order to come at the target of 8845 at 60 times September 2026 PE multiple. And that, they say, is a discount of 20% to the 7-year mean. That's the astounding part about the ABB valuation and how some bulls are valuing it. But the point being, it's a 49% profit beat driven by margins, and the company's release does not indicate any material one-offs in margins. So if this northwards of 15% to 18% is the new normal, then imagine the profit growth that ABB will show throughout 2024 relative to 2023. It's just astounding what they have done. You know, Access Cap notes suggest that the extrapolation of Q1 to calendar year would lead to a 26% upgrade in estimates. So while the stock has done 10% in the run-up to the results, and maybe some bit of profit booking could come in, but I wouldn't be surprised if ABB has a big rara move in the session today. And quite the opposite could happen to VIP. Revenues were up 14 or 15% at 516 crores. The estimates were 513 crores, or we should have gotten the estimates here and not this. But be that as it may, the EBITDA is down 87.8% at 8 crores versus the Bloomberg estimate of 49 crores. Margins, 1.5%. The estimates were 9.6%, and largely due to the Bangladesh issues that VIP has had. Most brokerages have downgraded, so maybe a bit of a stick that VIP gets. One last stock, MGL. Most brokerages, including Citi, has upgraded the stock to a buy with a target price of 1550 for MGL. They said the stock is down by 15% over the last 2 odd months, but the margin and regulatory concerns are largely priced in, and the end of exclusivity poses greater risks to companies like Gujarat Gas, but not MGL. So watch out for MGL today.
Yeah, I'm going to add to your list of stocks. And Thermax is one that's actually had a very good run, 70% in terms of gains. It's been a favorite of the street, and for good enough reason. They've once again posted a good set of earnings, so their revenues are up about 20%. EBITDA is up 37% to come in at 273 crores. Margins have also expanded to about 9.88 versus 8.65. This is the outer end of their, or rather the upper end of their margin band. And net profit is up 20-odd%. Remember, the management has reiterated very recently as well that they have a very solid pipeline in terms of projects for export and domestically as well. And they have a very, very strong, good growth going ahead. So all that, keeping in mind the optimistic expectations have been justified, with Thermax once again posting a good quarter. Newland Labs, I know this is a couple of the mid-cap gems that a lot of fund managers seem to hold on their portfolio. Reported earnings, revenues were actually down 5%. EBITDA has also come in lower by 11%. Margins have seen a big decline, so 200 bips down on margins. This stock could be one that could see further selling in today's day of trade. 27.8, and net profit was down 20%. We will try and connect with the management to understand what went behind Newland Lab. But another one that I want to touch upon is AMI Organics. And Niraj, you can come in on this one because I know you track this closely. while there is so much opportunity in the space, and we've seen that in terms of the stock performance, you have Saurabh Mukherjee, likes of Saurabh Mukherjee, who actually own ABB Organics in their portfolio. This one's numbers this quarter haven't looked great. The performance of the counter, though, has not been too bad in the recent past. Revenues were up, EBITDA was up, but margins have shrunk quite sharply, nearly 300 pips, and net profit is also down. Anything on AMI? Because I don't know how to view these numbers. They seem a little bit like while they are a miss on margins and bottom line, top line seems to be okay, but I guess keeping in line with what's happening in the industry.
Yes, and apparently AMI's got that large plant, which is a critical part for FY25 earnings, operational now. And in the release that they've given on the BSE, they've spoken about how this plant will start contributing meaningfully to FY25 numbers. So I think...
but on the top line, there's not a problem,
yeah.
Niraj. I think the margins is what they've got to hit down. 300 bips on margins is looking bad, but
for most companies, maybe could it be the last of the pain before?
Yeah, and the stock performance has been pretty healthy.
Yeah.
I mean, the stock has been an outperformer in the industry. So AMI is one
it's also run up a fair bit. So I think the tolerance levels to tepid
it's going to get a knock in today's day of trade. So Newland, I think Sumit from Malabar does own Newland Pharma. So Newland and AMI are two stocks that could be on the downside. But Thermax, I think the street will like to reward again this morning.
Yes.
Yeah, Thermax will be interesting. Just a few more that you should watch out for, numbers and other factors. Piramal Pharma numbers look good on the face of it, but expectations were actually even higher. Their guidance was even higher. Nevertheless, revenues up 18%, EBITDA has grown 51%, net profits up 2x, 102%, and margins have also grown a healthy 455 pips. So at a time when this space has not been doing too well, otherwise, Piramal Pharma has had a good sort of run. Waaree Renewables is the other one, and you might not have all the graphics with you, but one I wanted to talk about just because of the kind of run-up Waaree Renewables have had. So their revenues are up 4.4 times. For Waaree. Their EBITDA is up 3.4x. So it's gone from 22 crores to 75 crores. EBITDA margins, though, are lower at 28% versus 36%, and net profits are up 4.5x. Now, this is an interesting company because obviously in the whole solar rooftop scheme, and whenever you want to have a play on renewable energy, Waaree comes to the fore. But their unexecuted order book is at 2,365 megawatts. So the revenue was expected to be higher. They were expecting to execute about 900 to 950 megawatts, but have done 704 megawatts. So you might see a bit of a knock on Waaree as well today because of those numbers. Clutch of others, maybe Sapphire Foods, since we've been talking about Zomato. Sapphire was interesting.
Zomato reports earnings today, so that should be an important one to watch.
Earnings. I was seeing a tweet by the Zomato management talking about how Mother's Day orders have beaten all other festivals. So yesterday they've had a sort of a dream run. Not that you'll see any impact immediately on their revenues or stocks, but these sort of celebrations are good for them.
Mother's Day, Women's Day, Men's Day, Father's
There's no
Day.
Men's Day. There's no Men's Day.
That's so much for sexism, huh?
That's every day. But anyway, Sapphire Foods. I was talking about Sapphire Foods. Nuvama has retained a buy on Sapphire Foods at 1812 with a 27% upside. It's their top pick.
Sorry, finish.
Which is Sapphire.
Which is Nuvama. Because everybody else, MK downgrade to add, ICICI Sec target cut, MOSL says weak SSG, Investec EPS cut. Everybody else hates it.
But Nuvama likes it.
Hates it, and nothing less.
As in, okay, hate is a strong word. All I'm saying is
so
that.
they say it's their top pick on KFC's stability. They say Q4 revenue in line with brokerage estimates, and management is slowing down Pizza Hut store expansion in order to revive brand. So Sri Lanka is, of course, the better prospects, etc., because they've invested quite a bit in the Sri Lanka business. But yes, to your point, you're right. Everyone else doesn't like it.
Who knows? Yeah.
Let's see. I'm waiting to see what happens on opening bell. But that and clutch of others.
Yeah, just one last stock actually. Shada Cropchem. Did we cover it?
No,
okay, we haven't.
Go.
Just one thing, because the numbers were down. Revenue, margin, PAT was down, but way higher than Bloomberg estimates. So revenues 1312, estimates were 1043. Imagine 30% beat nearly. Margins at 19.42. The Bloomberg estimate, I don't know what happened there, estimate was 13.3%. And PAT was down 28% at 143 crores. The Bloomberg estimate was 63 crores.
And I think a lot of that could be in the price because the stock for the last 6 months has been a washout.
Yes.
But on Friday, you saw a 3% up move just before those earnings. So maybe somebody apart from Bloomberg knew what was coming on the street. But yeah, that's pretty much what we have. Implied Nifty is indicating to a flat to low start, but there are going to be so many earnings that you want to watch out for. 37 odd point. That's actually looking much better than it did an hour ago when I checked. So maybe holding on to 22,000 is going to be critical for the street.
But I guess that more than anything else and all that we've spoken, the man who matters has spoken, Tamannna, and kind of matters as well.
So this conversation is an important one, and you've probably seen the Prime Minister in several interviews over the last few weeks. This one's important because of the timing. Just yesterday, Prime Minister Narendra Modi, in an exclusive interview with my colleague Niraj Shah of NDTV, says that the BJP will expand its footprint hugely in Eastern India this time. In this overarching interview, he also speaks of the governance model of the BJP and his commitment to women's empowerment. Listen.
हिंदुस्तान के करीब करीब सभी राज्यों में मेरा जाना हुआ और मैं कह सकता हूं पूरे देश में भारतीय जनता पार्टी और एनडीए को 400 पार कराने का दृढ़ संकल्प है। बिहार ने भी उसमें कई नए रंग भरे हैं। बिहार ने उसमें एक नई ताकत दी और इस प्रकार से ये अपने आप में पूरे देश का जो माहौल है वही माहौल बिहार का है।
प्रधानमंत्री जी, बहुत सारे आंकलन लगाए जा रहे हैं कि जो ईस्ट इंडिया है वहां पे बीजेपी का अपस्विंग है। आप बंगाल की बात कर लें या फिर उड़ीसा की, आंध्र प्रदेश और तेलंगाना में भी, तो आपका क्या असेसमेंट है? एक
तो राजनीति के अलावा अगर मैं कहूं तो शायद मेरा 2013 का भाषण है और तब मैं पीएम कैंडिडेट भी नहीं था कि भारत का विकास करना है तो हमें पूर्वी भारत को विकसित करना चाहिए, पूर्वी भारत को ग्रोथ इंजन बनाना चाहिए। पिछले 10 साल में मैंने लगातार हिंदुस्तान के पूर्वी भारत में इंफ्रास्ट्रक्चर, एजुकेशन, हेल्थ, ऐसे हर प्रोजेक्ट पर बल दिया है। इस चुनाव का जहां तक सवाल है, जबरदस्त आंधी उत्तर, दक्षिण, पूरब, पश्चिम सब दूर है। पूर्व में इस बार परिणाम ज्यादा मिलेंगे पहले की तुलना में और मैं मानता हूं देश के लोगों के लिए ये चौंकाने वाले, जैसे तेलंगाना, आप कल्पना नहीं कर सकते वैसा परिणाम तेलंगाना में मिलेगा, वैसा आंध्र में मिलेगा, वैसा उड़ीसा में मिलेगा, वैसा बंगाल में मिलेगा, पूर्वी भारत में मिलेगा, बिहार हो, झारखंड हो, असम हो। यानी एक प्रकार से मैं देख सकता हूं कि चुनाव में भारतीय जनता पार्टी के पास जो है उसमें कई नए एरिया अधिक प्लस करेंगे।
ये कैचमेंट एरियाज की आप बात कर रहे हैं, प्रधानमंत्री जी बिहार का आंकलन करिए, क्या लग रहा है बिहार में क्या होगा?
बिहार में हमारे साथियों से मेरी बात हुई, पहले हमारी एक सीट हम हारे थे, शायद इस बार हम एक भी नहीं हारेंगे।
अभी हम जहां पे खड़े हैं वो चरखा समिति के पास हैं हम। आप बताइए, जब आप आते हैं बिहार तो आपको क्या क्या ख्याल आता है?
वैसे मैं संगठन के काम के लिए यहाँ बहुत आया हूँ, अनेक क्षेत्रों में मैं गया हूँ, और मैं काफी पुरानी चीजों से जुड़ा हुआ रहा हूँ यहाँ।
आप इस चुनाव को रेफरेंडम के तौर पे देखते हैं या गवर्नेंस मॉडल की लड़ाई देखते हैं?
भारतीय जनता पार्टी ने देश को एक गवर्नेंस का मॉडल दिया है। देश ने कांग्रेस का मॉडल देखा है, देश ने लेफ्ट का मॉडल देखा है, देश ने मिलीजुली सरकारों का मॉडल देखा है और देश ने पूर्ण बहुमत वाले भाजपा एनडीए का मॉडल देखा है। और वह गतिशील सरकार देखी है, निर्णायक सरकार देखी है, रिस्क लेने वाली सरकार देखी है और उसके आधार पर हम आगे बढ़ रहे हैं।
प्रधानमंत्री जी, महिलाओं की संख्या वहाँ पर बहुत है। महिला वोटर, आपने एक कॉन्स्टिट्यूएंसी बनाई अपने लिए, क्योंकि जो आपने किया, इज्जत घर दिया, उज्ज्वला योजना, बहुत सारे राज्य में भी महिला सेंट्रिक स्कीम है, तो आपको लगता है वो महिला वोटर आपके साथ है?
एम्पावरमेंट ऑफ विमेन, ये मेरा कमिटमेंट है और मैंने G20 समिट में एक लीड लिया है, विमेन लेड डेवलपमेंट, और इसके लिए हमें महिलाओं को अवसर देना चाहिए। परंपरागत हमारी जो चीजों में महिलाओं को जोड़ते हैं उससे ऊपर उठना चाहिए। जैसे हमने गांव में ड्रोन दीदी बनाई, जैसे हमने आर्मी के दरवाजे खोल दिए, जब हमने एयरफोर्स में पायलट बनाए, हमने सीमा पर हमारी बेटियों को भेजा, सियाचिन में हमारी बेटियां जाकर के देश की रक्षा कर रही है। तो मैं एक साइकोलॉजिकल चेंज में सफल हुआ हूं और देश की विकास यात्रा में महिलाओं की शक्ति एक अतिरिक्त शक्ति बनेगी और वो परिणाम को गति देगी।
Important set of statements from Prime Minister Modi in the heat and dust of poll campaigning in Patna. Actually, and remember, Bihar doesn't go to polls, or this seat doesn't go to polls immediately today, but it is a very, very important state in terms of the bigger picture as well. So, we're talking about the last 4 phases, why they're crucial, but let's start with phase 4. We've sort of crossed the halfway mark of the election now, not just a number of phases, but number of seats, because more than half the seats out of the 542 have gone to vote so far. So now in phase 4, you have polling in 96 seats, that's today. Number of constituencies is 96, number of candidates will be 1,717, and we'll just come to the next page where we tell you where the NDA and the India Alliance candidates sit. So all 96 seats on the NDA and 95 on the India Alliance. Now, quite a few of these seats now become important because of the key candidates on them. And Akhilesh Yadav from Kannauj is an important one because he's going to try and wrest control back from what is a family stronghold. Ajay Mishra in Ateni will be fighting. Remember, this was a controversial candidate as well. Arjun Munda from Khunti will be fighting as well. So you're going to see a lot of candidates in this election who've also swapped sides over the last 5 years, moved from one party to the BJP or vice versa. So, for example, Dilip Ghosh versus Kirti Azad becomes an important fight in Bardhaman, Durgapur in West Bengal. And, that would be interesting to see. Giriraj Singh from Begusarai is another big face that is going to polls this time round. Pankaja Munde in Maharashtra, Bid. This is again a family stronghold, and this is a prominent candidate coming in from Maharashtra. Maharashtra in itself is now an exciting fight. Asaduddin Owaisi, Hyderabad is another big candidate that is going to go to the polls. All of Telangana and Andhra Pradesh also go to the polls this time. This is going to be an interesting fight. Yusuf Pathan versus Adhir Ranjan Chaudhary. This time round in Behrampur is one to watch out for. So a host of other fights like that, which will be seen, quite a few seats in West Bengal as well. So SS Ahluwalia versus Shatrughan Sinha in Asansol will be one to watch out for, and G. Kishan Reddy in Secunderabad. But let's come to why this is an important set of elections at this time. And like I said, it's because Andhra Pradesh and Telangana all go to the polls. And for the BJP, the success of the alliance with TDP's Chandrababu Naidu becomes crucial in Andhra Pradesh. Remember, Chandrababu Naidu lost out to the YSRCP, that's YS Jaggan Reddy, in the state polls, and now the BJP is tied up with Chandrababu Naidu in Andhra Pradesh. That's a bit of an experiment. We'll have to see if that works. When it comes to Telangana, remember the BJP got 4 seats in Telangana in the last general election, which was not really expected. This time, the Prime Minister has been on record saying that people will be surprised with the kind of headway they've made into Telangana. But Telangana is going to be a tough fight one way or the other, because you've seen the Congress win a state election there right now. And the chief minister from the Congress party has been polling very aggressively. So Telangana is going to be a challenge for the BJP. The last 4 phases are anyway crucial. You could say it's the business end of the election in a sense for a couple of reasons. For one, a lot of strongholds of the BJP where they scored very well go to polls in the last 4 phases. All of this talk of low voter turnout and is the BJP losing ground, they have an opportunity to sort of turn the wind on that and counter that perception in the last 4 phases, which is also why it becomes fairly crucial. The battle in Bihar is crucial because remember, they've tied up with Nitish Kumar, and does that work or not will be a bit of an experiment because Nitish Kumar himself facing a bit of setback politically. And Maharashtra, I would say, is the X factor. It's the most confusing of all states. I think most pollsters are also shying away with it and from it because you've had parties split, change sides, leaders within parties on 2 different sides. So no one can really predict what will happen in Maharashtra. It has 48 seats. So I would say the important bits of the election kind of begin now, which is why this is going to be quite an important phase. Just one more set I wanted to pull up, if we can, is how the Nifty has behaved before and after an election. And we're seeing a bit of a volatility in the last few days, the last 1 week. It's par for the course in a sense. So in 2009, you had the Nifty go up 28% just a month before the elections. And we're pretty much a little before that mark, a month's mark in. In 2014, it was 6% up, 5.5% up. And remember, this was the upset election. This was when you had the Modi government first coming to power. 2019, once again, was pretty much factored in, like you're seeing in 2024. And not much move. Again, there was quite a bit of volatility. What happens after the election? Now, in 2014, you had a 6% up. We'll go back to the previous plate if we can. In 2014, you had a 6% up. 2019, again, the result was expected, the outcome was expected, and the markets didn't move much. In 2009, you had a drop because you were contesting with maybe a sort of a coalition government. Let's move to the next plate and just give you a sense of how markets do perform around elections 3 months before. Again, in all years, you had an upswing between 1996, 98, 99, but in 2004, you had quite a bit of a hit, 10.5% down. Suffice to say that there is a fair bit of volatility ahead of elections. So what you are seeing right now is par for the course, not something that you should be too concerned about. In 2009, though, you had a great run-up for the market, about 55% up ahead 3 months before the elections. 2014 was 20% and 2019 was 8%. When it comes to after 2019, that's when you saw a 7% drop 3 months after the elections. This was again a very expected set of results. So this correlation sometimes is tough to make. It does not necessarily matter. It is one event that the market looks at, but then there are a host of other factors as well. All right, we'll take a very quick break, but we'll be right back with the FNO setup and a lot more. Stay tuned.
Welcome. This is India Market Open. As we move into the next phase of polling, where we are now starting to get you all the way and the many different instruments that you can in fact employ in the futures and options space to get in touch with the derivative space and how you can in fact deal in the elections. And for that, we bring you the election trade for over the next few weeks. Right at the top, let's start by taking a look at how markets are faring, how they have done in fact over the course of the last few days, and what you can do in this election season. Now remember that the Nifty advanced by around 0.4% last Friday, but it was about a short covering because of the kind of shots that we saw last week. And that's evident in the near 4% decline in OI as far as the Nifty futures go. The Bank Nifty futures, on the other hand, are of course looking at a little bit more unwinding, but the underlying remained flat. So there is a little bit of uncertainty, and as we move into the next phase of polling, a lot of these factors are likely to change. A quick word on the India Volatility Index. Over the course of the last 2 weeks, we have seen it move from the mark of 10 all the way to 18. And that is something that, of course, is going to continue to be in focus because of the fact that, option premiums naturally will expand as we move into that big event. Come first week of June, of course, we will have a lot more clarity, and that potentially the big outcome of the general election will eventually lead to a decline. But for now, as you can see, this is how your VIX has panned out. And over the course of 1 month, it has moved up by as much as 60%. Well, let's take a look at the options market then. And when it comes to the options market, specifically when it comes to the Nifty, I'm going to first talk about this week and how and what we can expect as in terms of your open interest. So, of course, last Friday was a day where we did see a lot of volatility, but eventually the Nifty climbed. Where does that bring us when it comes to your overall open interest distribution picture? So, at the moment, considering the option premiums have expanded, we have also seen an expansion in the range, which means that on the higher end, we now are looking at 22,500 call as the one with maximum open interest. In terms of puts, we do have substantial open interest in the 22,000 put, but on the lower end, all the way down to around 21,000, 21,500, those are the levels that you can keep in mind in terms of your put writers coming through. The reason, of course, is that we've seen such a broad range is naturally because your volatility, your premiums have risen substantially. Your implied volatility has risen substantially as well. So I reckon that all the writers will need that much more margin of safety in order to not get caught up in very wild swings. Now, let's move on and talk about June. And now this is where we're going to continue to give you a day-to-day tracker of how things can in fact pan out as far as the June series is concerned. Now, June is going to be important because that's where we're going to see most amount of options building and the kind of open interest that we can in fact see. June is looking at a 10% increase, and we aren't even midway through the month of May. Now, the reason why we are looking at this is naturally, it's a lot of positions being taken considering the outcome of the election in the first week of June. If we can also have the options open interest as well for the month of June, if that is a possibility, because that will actually give us a better idea about what sort of bets are being placed there. And of course, at the moment we are going to continue to see 23,000 as the one which will be in focus. But this is as far as June is concerned, and for now 22,500 is where we are looking at the most amount of accumulation in calls as well as puts. So a lot of strangles being written there. And of course, on the lower end, we do have a lot of writing around the 22,000 put as well. So it does seem like, as far as June is concerned, the traders are looking at a positive movement. But don't forget, this could very well change over the course of the next few days and weeks. Now let's talk about the stocks. And of course, again, a lot of that will be on account of earnings that the change will come through. And we do have longs in JK Cement, Apollo Tyres, ABB, Dr. Lal PathLabs, and of course Cipla, on the other hand, looking at shorts. In terms of stocks which are seeing unwinding, we are looking at Godrej Properties, MGL, and of course short covering for Coforge, BPCL, and Canfin Homes. the question really is, what do you do here, and what sort of bets can you place as we move into the election trades, and what sort of buys and sells that can be deployed in this market? Well, we are in conversation with Ajit Rambia of Vajira Ventures, who's joining us on the show. Ajit, good morning. Thank you for joining in. What's your take on the markets, and positionally, how are you based when it comes to the Nifty and the Bank Nifty?
Yeah, good morning, Agam. Thanks for having me on the show. Market indicators are showing signs of weakness right now. So we saw a fall of 3% in Nifty last week. Bank Nifty was also down for 9 consecutive days. Banks are still underperforming the markets. Continuous FII selling and uncertainty in political world is dragging the market downwards. We believe this type of sideways movement with a negative or downward bias will continue in the market till the political scenario is clear on 4th of June, when the parliament election results will be declared. So in Nifty, we have a resistance at 22,250 levels and a support of 21,950 levels. Whereas in Bank Nifty, the last month expiry close of 48,200 will act as a resistance, and the support stands at 47,000 levels. So we urge our viewers to completely hedge their positions in this uncertain periods.
Okay. All right. So, with that, Ajit, let's shift focus to stocks which are on your radar. The first one, I believe, is Birlasoft. Can you take us through the option structure here?
Yeah. So we have a bearish view on Birlasoft. The whole IT sector is under immense pressure and is underperforming the markets. Hence, we deploy a bear put spread in Birlasoft, where we buy 1,580. There is an ATM May put at 17 rupees 80 paise, and sell 1,540 May put at 6 rupees, which is our target price. So the cost and maximum risk of the strategy is 11 rupees 80 paise to gain a potential profit of 28 rupees.
All right. And the other one on your radar, I believe, is BPCL.
Yeah. So BPCL, we are bullish on BPCL. It has declared a 1:1 bonus. The record date for X bonus stands on 22nd June. So we have a bullish strategy where we buy 1 BPCL May future at 619.75, sell 1 BPCL May 670 call at 5.60 paise, and hedge it by buying 1 BPCL May 570 put at 4.60 paise. So our target for BPCL is 670, where we sell our call, and the stop loss is 570, where we hedge ourselves by buying a put.
All right. Well, those are 2 strategies as far as stocks go from Ajit Rambia. Ajit, taking a moment to thank you for joining us and, taking us through your views on the markets and, of course, giving us a handful of option structures to deploy in these volatile times. With that, it's over to you, Tamannna.
All right. Thank you for that, Agam. And really, what kind of a week are we going to have is the big question. Sudeep Shah, Deputy VP, Head Tech and Derivatives Research, SBI Cap Securities, joins us now on the show. Sudeep, very good morning to you. We're hoping for a good week. Do you think volatility is going to continue to be the name of the game? What would be your strategy on the Nifty and the Bank Nifty?
Morning. See, what I feel is that obviously last week we have seen volatility. We have seen VIX rising up to 18.5 levels, and that is in line with the kind of volatility that we should have witnessed ahead of the election results. So I feel right now, while the phases of elections are going on, we would see this volatility still stabilizing around between 17 and 20 levels. And we steadily expect the volatility to inch up. So overall, I feel it is going to be a market where we would witness stock-specific moves. We could even witness consolidation with a negative bias. And on the Nifty, from a broad perspective, I feel 22,220, 22,250, where the 50-day exponential moving average is placed, is going to be that critical number that we should be eyeing for. Above 22,250, there could be a good recovery or a short covering into the markets, but till 22,250 is not crossed, we could retest 21,750, 21,800 levels, which are the prior swing lows of March and April 2024. So overall, I feel it's going to be a kind of sideways to negative markets in terms of Nifty. And in terms of Bank Nifty, 46,900, 47,200 zone is going to be that all important support, which is the lower end of the rising channel. So there's that the most important support zone which is there, because if we see in the last 6 to 8 months, right from the lows of October 2023, the rising support comes around 46,900, 47,000 zone. So I guess 46,900, 46,950 will be the all important number that we should be watching out for. And we could expect Bank Nifty to take resistance at higher levels closer to 47,800, 47,900 levels.
Sudeep, let's start with your top picks of the day. What is on your radar today?
The first stock that I like is Endurance Tech. Now, we've seen all these auto companies as well as auto auxiliaries doing really well. And in the last 2 to 3 trading sessions, we've seen a good momentum in Endurance Tech. Now, with this move on Friday, which it was a 6 to 7% move on Friday, because of that, it has broken out of its 2 months consolidation, and it's a strong move on the upside. So I feel the daily, weekly, and the monthly charts are quite supportive of the primary trend, which is on the upside. And the stock could do well in the coming few sessions. And it's largely outperforming the mid cap and the broader markets Nifty 500. So I feel this could be bought with a stop loss of 2050 on the downside and 2170 to 2200 targets on the upside. The second stock that I like is Astral. Now, Astral has given a decent breakout on the upside. In any case, in the last several sessions, it was on an uptrend. But 4 or 5 sessions in between, it was consolidating, and now it is at the cusp of a big breakout on the upside. So the overall chart structures hint towards a move which could be towards the 2250, 2270 on the upside, and hence I feel this could be bought with a stop loss of 2110 on the downside.
Okay, Sudeep, stay on. Let's hear out the management of Syrma SGS, which came out with a top line number which was pretty strong. Mr. J.S. Gujral, MD of the company, talks about the earnings and the outlook for the coming quarter.
See, the EBITDA margin correction is essentially because of the change in the product mix. Per se, if I was to look at the margins vertical-wise, they are almost stable and there is no deterioration in that. Domestic demand, led by the consumer, is growing at a scorching pace. So when I say that we grew by about 55% last year and my exports grew by about 26%, this means my domestic business, which is primarily telecom, consumer-related business, has gone up by a significantly higher percentage, and hence the compression in the margin percentages. Going forward, we are very confident that in the coming year, we'll be able to sustain the margin at 7% of the revenues. And thereafter, in the coming years, once my overall capacity, efficiency, utilization kicks in, there could be a marginal accretion to that. But this year, we maintain our guidance of about 7% EBITDA margins on a yearly basis. Quarter on quarter, there could be variation based on the product mix. But on a FY25 basis, I am very confident that will be 7% minimum of the EBITDA margins.
Right. So at the moment, sir, we are going with the assumption that for the upcoming year, EBITDA margins will be maintained at 7%. And once you do have more capacities added, I reckon that there will be some amount of improvement on a year-on-year basis next year. But so moving on, I reckon the next question in that case would be your product mix. Now, sir, if you could tell us about the kind of order book that you have at the moment and what sort of an expectation can we go along with as we move into this financial year with respect to the kind of orders that you expect to get?
We have an order book visibility of about 4,500 crores. And in the current FY25, I expect my consumer business, which currently is about 40% plus, to slightly come down to 37 odd %. And the endeavor of the management is to bring it down further, not by cutting on the consumer business, but by growing the top line from other verticals. Auto will constitute about 21%. Healthcare, medtech will constitute about 8%. Industrial will constitute about 25-26%. and others about 5-6%. That would be the broad composition of the sales going forward in FY25.
Right, that's the management of Syrma talking about how they would look to maintain margins at 7% in the next quarter. Remember, the top line's done well in terms of the revenue growth. The outlook also looking fairly promising. Sudeep, one stock this morning that I want to talk to you about is Tata Motors. I know it looked good in the charts till it fell in the early part of last week and then gathered itself together and did well on Thursday, Friday. Numbers have also largely been pretty good, in line with what the street was expecting. At 1,046, what are we expecting on Tata Motors today?
See, I expect a sideways opening on this stock because the numbers were not that exciting. So overall, the trend of the stock is on the upside. It's firmly on the upside if you see all the time frames. So I feel this stock could open say somewhere around closer to 1030, but overall the stock will have good support at 1010 levels, where it was in the last few days it was rebounding from those levels. So I feel 1005, 1010 levels overall positionally for the next few sessions will act as an important support zone until the time this zone is guarded. I on the upside, this stock eventually could head up to 1080 or 1100 in the coming few sessions.
Also, another quick one on Zomato. Record highs on the stock. It reports earnings today at 204. Do you see a breakout on Zomato? Does it look good to buy?
See, if you see the charts of Zomato, since even the lows of March, which was closer to 144, the stock has swiftly risen around 25-30% in the last 2 months. And post that uptrend till early April, the stock has even consolidated for a bit. So I feel now till the time 185, 187 level broadly holds, the stock could do well up to 225, 235 levels on the upside in the next few weeks to come.
Sudeep, just wanted to, get your take on the entire banking pack and what are you expecting over there? We've had some results over the weekend, but in terms of your frontline ones, your SBI, your PNB, etc., they did fairly okay in relative terms last week. Do you see more signs of life there?
See, firstly, if we see Nifty PSU Bank Index, this index has breached its 20-day exponential moving average on 7th May. And since then, it is not able to recover fully. So until and unless the PSU Bank Index itself crosses 72.20, 72.30 on the upside, I feel it's going to be a bit difficult and there could be resistances at higher levels. Within the PSU Bank basket, I feel Bank of Baroda is reaching its crucial support zone closer to 243, 245. And in the last 3 to 4 months, every time it has tested this zone of 240, 245, there has been a strong bounce back. So I feel just from a risk reward perspective, the stock is approaching a critical support zone. And if someone wants to accumulate the PSU banking space, any stock within that, I feel BOB would be a good bet closer to 245, 246 with a stop loss of 238 on the downside.
Dare say, watch out for ABB in the session today, and we'll get in Deven Choksi's views on the fundamentals in a bit. But if you're just tuning in, from amongst a lot of stocks to watch out for, there is Tata Motors, wherein there is slight skittishness about the near-term commentary due to the Indian CV demand being slightly weak in the near term due to the election season and the global piece as well. There is Bank of Baroda, which has seen a few upgrades. There is Eicher Motors, which is largely in line. ABB probably will be that one large cap name to watch out for, simply by account of the beat that it has had. Now, Sudeep, before we talk about the fundamentals out there with Deven, just a quick word on what the derivative positions in the chart suggest, because the stock has had about a 10% run up in the last 10 or 12 sessions ahead of the numbers already. What do the charts suggest?
Is it about ABB or
ABB?
Yeah, so see, if you see ABB on charts as well as the data Now, there's been a strong support zone which is built around 7,000 zone for that breakout on 6th or 7th May. And every time the stock has come closer to 6950, 7,000 zone in the last 3 days, we've seen a strong pullback from those areas. So I feel overall now 7,000 zone would act as this important sticky support zone. Until the time this stock holds 7,000, there could be this incremental up move up to 7,500, 7,650. And we've seen, even though the stock has been trending on the way up, these kind of numbers are being has made the street excited. So I feel this stock could continue edging higher, probably say somewhere closer to 7,500, 7,600 in the coming few sessions.
Okay, well, watch out for those targets, and as the pre-open rates about to kick in, let's welcome in Deven Choksi of DR Choksi Securities with us, joining on the show as well. Deven, good man, good having you. Thanks for taking the time out. Good morning. We're trying to talk about stocks or identify stocks which could have a big move this morning. Fundamentally, when you look at results, amongst the many, you can't take your eyes off ABB and the kind of margin beat that they've given. Have you looked at the numbers, and what is your thought on this very expensive stock which has delivered quite a stunning set of numbers?
Yeah, good morning, Niraj. Well, few things. One, this number is coming in the backdrop of the strong order book position that this company has been carrying on for some time now. And the order has been executed at extremely favorable, what you call margins also. That is what I believe. On one side, they've had the situation in past of the lower execution rate, and at the same time, I think some amount of inventory clearance in the balance sheet. That particular process has been carried out and it's been cleaned out. So frankly, if you are looking at this quarter number, or for that matter, I think the full year number, December ended full year number, we believe that I think the business of the company on a year-on-year basis is expected to grow at a pace of around 20% and above level rate. I think so. That is where I think we believe that the opportunity-wise, I think this particular stock remains strong. As you rightly mentioned, I think the valuations have actually factored in FY26. So to a greater extent, I think one will not get the immediate opportunity to make a decent rate of return unless market creates a headroom for the stock from the stock and probably give you, I think, at a lower price at some point of time. But otherwise, the company remains in a strong uptrend, largely because of the fact that the capital goods segment per se, and including, I think, the infrastructure spending that the government is carrying out, is now experiencing the larger amount of opportunity, call it thrust, call it, I think, the larger picture being drawn, likes of ABB, Siemens, Larsen, BHEL for that matter. I think each one of them are having in their distinct areas higher amount of growth to talk about. So certainly we remain bullish, but maybe I think we'll buy when market gives another opportunity. Otherwise, we'll continue to hold the existing investment.
Hold existing, but you'll buy more when there is an opportunity. The stock is expected to see a 5.5% gap up. At least that's what pre-open is indicating to. Deven, you saw Tata Motors. What did you make of those numbers? Debt-free, cash flow positive soon. Most verticals are looking good. They're cautiously optimistic, though. Pre-open, the stock is expected to see or is showing a good start. On Tammo, would you add this morning?
Yeah, good morning, Samina. Well, I guess I think whether we act today morning or otherwise, I think that is one important aspect to note about this company. Having corrected themselves from whatever the legacy situation in which this company was operating, including management of cost, including vendor rationalization, including bringing in the efficiency in each of the verticals, be it the passenger car vehicle vertical, or for that matter, GLR vertical, for that matter, commercial vehicle segment. In each of the verticals, this company has systematically, I think, taken the cost under control. That is the first important point. The newer designs and the model in the vehicle, passenger vehicle segment have actually given them a significant amount of mileage. And probably today, the company compares fairly well with any of the global models which are available in the marketplace in the passenger vehicle segment. On the other side, the key triggers are two. One, I think GLR definitely, I think, showing growth in this quarter too. I guess I think the numbers are extremely smart, including on the EBITDA margin front. And at the same time, commercial vehicle segment, which to me has still not started reflecting the full potential. because the scrappage vehicle policy, scrappage policy of the commercial vehicle is something which is yet to give the larger amount of thrust to this company. In my viewpoint, given the possibilities of having a separate JLR company eventually, I would think that unlocking of the values are also likely to happen in this company. They also made an announcement about the finance business going out of the portfolio of the company and going with the Tata Capital. So they are systematically cleaning up the balance sheet also. Correction in the price definitely is more meaningful to buy the stock into the portfolio. Maybe current result is reflected in the current price. There may be a possibility of around 5 to 10% upside that you can't rule out. But otherwise, corrective downside would be a better time to buy into the stock, or buy into this particular stock in the portfolio.
Right, that's Tata Motors. Expected to see a flat start in trade this morning. Zomato has got one you want to watch out for ahead of earnings. Another one that was very impressive is Jupiter Wagons. I know it's a small stock, but the story here is phenomenal. They posted record numbers on every front. They've beaten all expectations. Like I said, not a very large company, but the outlook looks very positive. And the stock is up nearly 30% since its reported numbers. On Jupiter Wagons, do you have a call at all? Do you track this one? Would this be an allocation you'd consider making given the multi-year growth story here?
I think we'll have to look into this particular company a little bit more in detail. Though I think on the surface, I think it looks promising, but haven't done enough amount of study on this company. So we'll come back to it some other point.
Let's just talk about Piramal Pharma for a sec. Good set of numbers, and we'll see what the counter is doing pre-market as well. In fact, I want to come to Sudeep on this. 5% up, numbers look good, margins have expanded. Sudeep, is this something that you track, and where do you see going? Do you see a further upside?
The charts are displaying that while there was a good rebound from the lows of 115, 118 levels, and in the last 1.5 months, we've seen a good 25% rise also in this. And considering the opening today, I feel overall now 145, 146 zone, which is even the swing highs of the January month, would now act as an important support. And until this zone of 145 holds, we could see the stock extending its up move, say closer to 168, 174 levels on the upside. But if it breaches 145, then once again it will come back into that range that it was trading into in the last couple of months. So 145 will be the all-important number that I would be watching out for post today's opening.
Well, Piramal Pharma is also looking strong. A clutch of names out there, right? Piramal Pharma is in fact now alongside ABB the top gainer on the BSE 500. These rates will change, of course, but very close to the rates settling down. And about 4% for Piramal, 5% for ABB. Dr. Lal PathLabs is about 3%. It's not a very heightened activity. MGL is also up about a couple of percentage points. Wonder what Newland Labs is up to.
Thermax as well, if you want to just have a look at that.
Thermax too, let's pull that up. Newland is actually down 7%. And Thermax should come up on your screen about 1.5%. But, well, a slew of brokerage notes as they come in every day. And Harsh is joining us with, not surprising, the Jefferies view on ABB India. Harsh, that stock is amongst the top gainers on the BSE 500 as the pre-open rates settle in. What does Jefferies have to say?
Well, very strong commentary, in fact, coming in from Jefferies. What they seem to be suggesting is operational efficiency seems to be playing out very, very well. Just in terms of numbers, a 49% beat in profit after tax to Jefferies estimates, a 52% beat in EBITDA. So that's what's driving that PAT beat really. And no one-offs whatsoever in that EBITDA number. That, I believe, is probably one of the most impressive pieces of everything that's playing out. In terms of what's working, well, services, exports, aiding margins, but across the board, from product to exports, everything seems to be aiding that margin number for ABB, but particularly services. Also, past commentary seems to suggest, as per Jefferies, that pricing power remains with ABB, and therefore not a surprise just in terms of the kind of numbers that they've delivered. But the beat was largely because of operational efficiency, fixed costs largely remaining quite controlled, and that's what's leading to the beat. Jefferies believes that every 50 basis point hike in margin will lead to a 4 to 5% roughly hike in EPS estimates, and therefore that will be a very strong driver going forward as well. They've hiked their EPS already by 1 to 4% odd over the next 2 years, and therefore they've also rolled forward their estimates in terms of EPS, and they've hiked their multiple from 55 times to 60 times June 26 EPS, and therefore they've given the target price of 8,800 plus 20%, 25% plus in terms of target price and upside.
All right, thank you for that, Harsh, there with the top brokerage calls. We've just been talking about Tata Motors last couple of minutes, at least in the pre-open session. Actually, pre-open session has now closed. Let me just pull up a Tata Motors, and it's down about 4% in this pre-open session. Deven Choksi, some talk, and Niraj was talking about near-term call, etc. I know you've spoken about it before, but do you think that this kind of a knock is justified, or is it reflecting more the run-up that we've seen in a Tata Motors?
Well, I'm pretty clear about one aspect, that I think this company has done a lot of corrective strategies, and that is why probably I think it deserves to be in a better books of investors now. The commercial vehicle in particular, I believe, is I think a story where it is going to be unfolding the business prospects, I think, in next 3 to 5 years time. So those who are keeping the eye on the directional call, they'll make a lot of money out of this kind of business. Maybe I think the market in the near term is pricing everything out because of the result calculations, whatever you call it as. But if you are looking at, I think, next 3 to 5 years, the demand growth that we are talking about, additional demand growth that we are talking about from scrappage policy of commercial vehicles of around 2.5 lakh new vehicles per year. And existing business continues to grow largely because of the infrastructure growth in the country per se. The multimodal logistic transportation system that one is basically experiencing, connectivity between the railways and the roads and the waterways and the airways. I believe that I think this particular transportation system also demands higher amount of on-ground credits. And that's why probably this company positions itself far more favorable. Given the kind of passenger vehicle within the, that is the bus segment that we are talking about, there too, I guess, I think the hydrogen-powered vehicles and the new range of products, I think, which are coming up. So all in all put together, I believe that I think 2 catalysts in this particular portfolio now. One, the JLR portfolio, and the second is commercial vehicle portfolio. They are likely to probably unlock the valuation for the shareholders of Tata Motors. So any downside in the price, corrective price, is a better price to buy into the stock. Maybe 5-10% lower is always a good opportunity to buy into the stock.
Sudeep, I just want a quick call from you on a Tata Motors, 4% down at about 1,005. Is it a buy if you get an opportunity on dips?
Yeah, see, in the morning session also right now, when we were discussing about Tata Motors, I was of the view that 1,005, 1,000 levels would be a very good support zone to add, and the stock is offering us that opportunity. So overall, if you see the charts from a positional perspective, the base support for this for the next few sessions would be 985, 990, and any dip closer to this 1,000 levels would be a good opportunity to go along. So I feel 980 would be a strong support, and this zone, we've seen the stock consolidating above this zone for over a period of, I guess, 1 month now. So 980 could act as a strong stop loss on the downside, and 1,000, 1,005 levels would be a good accumulation zone.
Okay, just a thought, and I'm just trying to look at why some of these things could be happening. So the Citi note on Tata Motors lays out this interesting piece on the outlook for Tata Motors. So Citi says that in JLR, marketing expenses could rise. In the India CV business, near-term volumes could be weak, partly due to elections. In the India PV business, in addition to elections, heat wave, high channel inventory and strong base could result in modest near-term demand. So for a stock that has run up quite a bit in the last 12 months, if there is some caution around near-term demand, it should impact. But I wonder what is impacting Tata Motors. Will it impact some of the other stocks as well? So that's the key thing. Deven, I don't think we have too much time here, but just 30 seconds if you can. We'll talk in detail later, but 30 seconds. What is Tata Motors' pain? Could it also be pain for some of the other auto companies?
Could be. I think I don't rule it out, Pa. I think that is a near-term pain that anyway you will have to undergo. But to me, I think if you are looking at long term, this is an opportunity. When the pain comes, market gives opportunity at lower price. It's a buy. It's a call that we take.
So maybe on lower values, some of the people would be constructive. Remember, while there is a near-term caution on demand for Tata Motors, the medium-term outlook is not lost because they have already made the India business net debt-free, and the talk is that by FY25, the whole business, console business, will be net debt positive, so in the net debt neutral. So therefore, in that sense, the medium-term outlook looks okay, but for a stock that has run up a bit of a downtick here. But remember, I think the stars of the morning are some of the others, the likes of Pharma, the likes of ABB, and some others, and we'll talk about them post 9:20 once again. The market's about to start off. You'll probably see a lukewarm start. The only question is, if there is short covering later on in the day, once the FI selling ebbs a little, could we see some uptick? Actually, a flattish start. It's not as bad as either. Most of the Asian screen also echoing the same thing. The Nifty Bank, too flat in trade, and the mid caps and the small caps are also flattish in this session. So those are those 2 or 3 indices that you got to watch out for. Now let's get the heat map up on the screen and show you what's moving and what's not. So there is equal level of red and green on the screen. Tata Motors is the top loser, down about 4%. There is weakness in Divi's, JSW, maybe a Reliance, slightly wobbly. We don't have too many stocks which are in the red massively, except for Tata Motors, but there's a fair degree of red, which is the problem. So not enough green, as a result of which the index is now 0.2% lower. What is doing well? Cipla. The brokerage notes on Cipla have been constructive. I reckon that is why Cipla is up about 3.5. There's strength in Britannia, HUL, ITC, some bit of FMCG flavor, maybe a bit of a defensive bent to the market currently. So not out of the woods as yet, you would have to reckon. About a 0.25% now, echoing what the initial pre-open rate, or rather the implied open, was suggesting. Lot of red. Tamannna, the action seems to be the broader markets in the green, if any, because on the large caps, it's just FMCG and Cipla. Very defensive bent.
And all about Tata Motors. And on that slide, slippery slope this morning, nearly 4.5–5% down. Let me just pull up the mid-cap and small-cap indices before we go into specific stocks and just take a look at what's happening there. Yes, down in the red as well. Not massively though, just about less than about 0.5% on both the indices. So the kind of volatility that we've been seeing in the markets probably will continue for the next couple of days. Specific stocks, and we must pull up ABB because that's sort of the hero this morning, something that we've been talking about since the start of India market open. Fantastic numbers is what the big trigger is. Apart from that, positive brokerage notes as well. So that's about 6.5% up. GE Shipping, decent numbers, good notes, but you know, the kind of bump up we saw in pre-open has sort of petered off. Piramal Pharma and Dr. Lal Path. So a lot of the triggers for the stocks that we're talking about this morning is all about the earnings. Piramal Pharma 4.5–5% up, fantastic numbers. Dr. Lal Path in that same vein, and you already saw a run up on Friday as well. Just a note that we're going to be speaking with the management ahead today. Kalyan Jewellers, decent numbers, but margins were slightly hit, and the street's not liking it too much. 1.5% down. Their update for the first 40 days of this financial year have been okay. They put out some information today saying Akshaya Tritiya, etc. was good, but the street not really buying it. High gold prices weighing down like it did on a Titan. Bank of India, BOI, results were not great. And again, you had brokerage notes which were not very positive either. That stock nearly 10% down. So Bank of India is hurting this morning. Just the last one I want to pull up is a Zomato. The results are today. We will see how those numbers really stack up for a stock that has been the street's darling, and whether it's justifying those kind of valuations. But the stock in anticipation, perhaps 1.5% up. So some spots of green over there, Samina, but overall the market breadth not very positive.
On expected lines, right? I mean, we want, it is going to be volatile and it's going to be in a range, and you want to watch out for very important levels. The broader markets are underperforming. Pull up Bank Nifty and see how that's performing. Remember, it attempted a pullback on Friday but failed quite miserably. this morning as well. Oh, it's turned positive. So what we are expecting is that it will attempt this once again, and a pullback this week cannot be ruled out on Bank Nifty, largely because on Friday it had failed. What is worth a mention is Tata Motors. The stock is getting... It's off the day's low point, but it's still down nearly 6%. So the weakness is there for everyone to see. Very sharp down move from 1,046, which is Friday's close to 986 in early morning trade. In terms of the benchmark as well, if you can quickly get up the Nifty, we're sub 22,000 once again in trade. So again, like we said, volatile in a tight range. 21,900 is going to be an important level of support for the street. In terms of earnings reaction, I think Tamannna has highlighted most of them that reported. But ABB, while Tata Motors is the biggest loser, ABB is getting a big welcome in terms of those earnings, 7.5% higher on ABB is what we have. Dr. Lal PathLabs, after a good set of earnings, Friday's up move was visible. This morning the stock is up 6% as well. Pull up Thermax, Newland, Ami Organics, those are a few other names. API, Apollo Tubes that have reported numbers. Thermax, good numbers, stock is flat. Newland, not such good, not such a great set of numbers. The stock is down 12%. ABB Organics, while top line looked really good, there was a little bit of contraction in margin, but it's par for the course, we believe. The stock is trading flat, no runaway gains on that one too. GE Shipping reported numbers, a quick check on how that one is doing as well. Should be doing a pretty good start in terms of what we'd seen, but now the stock is also once again turned flat. You also want to take a look at a few other counters like BEML, the stock is up 3%, so good move coming in there. You've got Cipla, Welspun, Polycab, good numbers there. The stock gets a thumbs up, 5% up move is what we have on Polycab this morning. UPL, Niraj had mentioned of how we'd seen a little bit of buying coming in on those stocks last week. That continues into this morning's trade, 3.5% higher on UPL is what we have. Apart from that, Adani Energy is looking good again. Sun Pharma Spark is also flat to slightly higher. Escorts, Kalpatru projects reported numbers last week. Good earnings from them too. The stock is seeing a little bit of buying, up 1%. But Bank of India is taking to the chin, 10% downtick on Bank of India. Kalyan Jewels also is looking weak. VIP is having a bad morning. Tata Investment Corp is looking bad. Sapphire Food is having a weak morning. Excite Industries, TVS Motors, GSW Energy are some of the other big losers. That's what we have in trade this morning. Sudeep,
I just wanted to add Wari. Because we spoke about Wari, again a stock which has run up, and numbers that were okay on the face of it, but at the end of the day, the amount of orders that they executed has not been up to the mark, and something my colleague Varsha pointed out, that stock on a 5% lower circuit. So, you have this trend of sort of stocks that have run up massively, but if the numbers have disappointed, the street has punished it. Polycab on the other end of that spectrum. Just look at Polycab today as well. Second consecutive trading day, if I count Friday and today, that stock just having another great run.
50% returns since those panic lows that came in 3 months ago.
Yeah.
And this is a mega cap stock which has delivered 50% in less than 4 months.
You're talking about when there was investigative agencies, raids, etc. Yeah, whoever ignored that and bought Polycab at that time and showed some faith is laughing their way to the bank today.
Yeah, they are. By the way, just one last name is Sharda Cropchem, by the way. As we spoke about it on the trade setup, Sharda Cropchem is up about 8% because the numbers better than what the street was estimating. So at least what the Bloomberg consensus estimates were. So pretty good going there.
Dilip Bilkon, let's quickly put out that one too. Good numbers. I don't know what's happening on the stock, but worth a mention. It's down 4% despite it being a good quarter for them. The stock really, I guess, has run up substantially. But VIP as well, we mentioned. Chola Financial is another one. And you've got Aarti Industries. Missed that one, but a quick one on Aarti Industries also would be helpful to see what's happening on that stock. Aarti trades flat for a change. But you want to come in, Sudeep, have you spotted anything in early trade? Nifty is up 22,000. So it's volatile as expected, but any trades that you've spotted for the week, intraday maybe, anything that's looking attractive as we see it?
Not from an intraday perspective, but yes, from a positional perspective, I feel Ashok Leyland in the last week had shown good signs of breakout out of that long consolidation that we have witnessed. So overall on Ashok Leyland, I feel from a positional perspective, if someone could hold for a couple of months, I feel the stock has given a good breakout above 188, 190 levels on the upside. And till the time this zone of 189, which is the 20-day exponential moving average, holds, the stock firmly could start heading up, and we could see in the next few sessions, we could see some consolidation. But overall, I feel the stock has now given a breakout, and we could see this stock steadily inching up closer to 215, 220 in the coming few years.
Tata Motors clearly standing out, and I just for the benefit of our viewers, what Citi said, which is that JLR marketing expenses could rise, near-term volumes in India CV business could be weak, and so on and so forth, is leading the stock to be amongst the most important talking points of this morning. Devin Choksi said, though, that some weakness in Tata Motors would lead him to buy this one. Devin, is this the weakness that you're looking for, or would you look for slightly better valuations on Tamo?
Well, I think there's nothing wrong with the current price also, 980 odd levels, nothing wrong with that as well. I would think that since the people took the positions ahead of reporting on, I think the result, maybe I think that's where probably they're a little bit disappointed and they are squaring out the positions. So in this current fall, as long as I think it is staying about 940, 950 levels, I don't think too much of a problem buying to the stock. Maybe I think one can go aggressive if it is going below 950.
All right, so Tata Motors is the stock of the morning, not for the best of reasons, but definitely taking a massive knock, over 6% down. I mean, I don't know, in the last several months, we haven't seen such a bad beat on Tata Motors, darling of the street. And perhaps that's what's also explaining the kind of virulent reaction that we're seeing this morning to numbers that are on the face of it, great, no real problem there. Perhaps the outlook on the CV business is a bit of a pain. And you were mentioning, Niraj, what the Citi note also said. I think we should just sort of reiterate that once.
Yeah, I mean, just in case, just before getting Dhananjay Sinha, if we can just pull up what Citi is saying effectively on how JLR, there are issues around marketing expenses which could rise. So that's part one. The other point that they are making is around the CV business. They say that the near term volumes in the CV business could be weak, partly due to elections. And lastly, the point even on the passenger vehicle business, and which is what I wonder whether it will impact some of the other PV businesses, because Tata Motors is saying that on the PV business as well, elections, heat wave, and a couple of other factors could all lead.
Why a heat wave? Is that because you're saying agri incomes will be impacted and hence? Because otherwise, I didn't quite get it. Why a heat wave should impact decision making of buying a passenger vehicle?
People are not leaving the house.
I mean,
for all you know.
There's air conditioning in all of those cars. I don't know. I was just, maybe a closer reading would help. But why would a heat wave logically impact, unless you're talking about pure agri incomes, which is not necessarily completely hitting their passenger vehicle
business anyway.
Maybe more on the CV.
Yeah.
So, what
a slew of factors, like I said. High channel inventory and a strong base as well could have a modest near-term demand impact on the passenger vehicle business.
High channel inventory is also a Maruti problem, since you pointed out that is it happening in the other places as well, though they don't seem too concerned. Anyway, let's turn our attention to the election trade, and here I want to thank Sudeep and Devin for joining us on the show today. Always great to have you on. But we're turning our focus on the election trade, and ahead of elections, this special segment that you will be seeing all week on India Market Open will focus on what kind of a strategy you should have when there is so much uncertainty and volatility in the markets. What is the street trying to tell us? And, quell some of those fears out there as well. Dhananjay Sinha is joining us to kick this off. He's co-head of equities and head of research strategy and economics at Systematics Group. Dhananjay, welcome. Very good morning to you and great to have you on the India Market Open.
Good morning, all of you. Yeah.
All right. So now let's start with the core question, really. Do you think that this concern of the election outcome is a bit overplayed? Is that the biggest issue, or are we also talking about the kind of FII selling that we've seen in May, which has factored that sort of nervousness?
I think there are both these factors are important. I think the market has been pricing in, I think, since the state elections that happened later last year. There was a kind of a buoyancy that had erupted after that, in anticipation that you will have a thumping majority in the next election for the BJP in its third government. So I think that has been priced in. And secondly, I would say also since December there was an early pivot that the Fed has actually inculcated in the market. So market was expecting about 6 or 8 cuts this year. I think that has been rolled back with the inflation momentum moving up, averaging about 30 to 40 basis point in the recent months. So that essentially means that somewhere around mid of this year, you might actually see US headline the core inflation starting to move up, and more so with the commodity prices rising. So both these things are playing their roles, and hence there has been a sort of a initially there was a buoyancy with respect to FII flows, both with respect to equities and bonds, but we have seen that moderating, and there has been an outflow recently. So I think if the numbers for the NDA is lower, let's say let's say about 300 seats or thereabout.
Yeah.
So I mean that's what people are increasingly talking about, and you have the tone of the Fed actually changing in somewhere around mid of this year, somewhere around May, June. I think there can be sort of volatility in the market, and the market has been somewhat overvalued.
Dhananjay, but just explain to me, and the point that you made. If the NDA tally is 300 instead of 400, although in a conversation with us, the Prime Minister just last evening has reiterated 400. But okay, if the market is accounting for 300, I'm trying to understand why that is necessarily a valid reason for this kind of panic. What difference does it make to the ability of any government to run a country or to govern when you need 273? Yeah. So, is this more a case of finding an excuse or a reason to sell off after or book profits in a market that has run up massively since last December, as you mentioned?
Yeah, I think you're right, actually, but the fundamental reason is also that there is a certain amount of policy slant that the government had been running, the Modi government had been running, which has been favorable to corporate profits or the fiscal prudence that they've been talking about. They've been talking about a lot of investments on infrastructure, etc. So I think there will be uncertainty around those factors. I mean, our analysis shows that if you look at the Nifty 50 earnings over pre-COVID levels, there is a compounded growth of profits or EPS of roughly about 20%. I mean, if you look at US S&P 500, that will be about 8 or 9%. So essentially, what has happened is that post-COVID, the buoyancy in the corporate profit has been pretty good, and that has actually translated into a good amount of flow, especially in the local markets. The retail participation has been good, especially with respect to the mutual fund flows, which has been roughly in the region of 22 to 25,000 crores each month. So that has actually translated into a significant buoyancy in the mid and small cap space. So that when the sentiment turns and some of these factors change, the volatility can be very large, and especially since the illiquidity has been
We've lost that feed over there. But the point that Dhananjay was making, that you have seen this come in the wake of a market that has run up. The primary concern in the market still seems to be, an NDA not hitting a 400, but effectively a 300 or 320 makes no difference in the ability to actually run. Dhananjay, we've got you back. Let me just, cut to the chase and really what our viewers would want to know right now. All right, so you're looking at a period of volatility. The India VIX has gone up substantially. So what do you do? What do you do? Is this the time to, make a bet? and really sit back and take advantage of some of the prices that are available in the market right now? I mean, you have a Tata Motors down 6.5%. Is this the time to go shopping or stay on the sidelines?
So I think at this juncture between so I think we'll need to look for the outcome of this event. So that's one thing. But generally, I would say that between the value and growth dichotomy that the market generally trades on. So right now, we'll focus more on value stocks, and these will be large companies who have existing businesses and are available at at good value. Rather than expecting continuous growth for small and mid-cap space in particular. So that's the broad strategy. And I would say that I would look for election-related volatility or global flows-related volatility to sort of create good value before sort of jumping in. So I think at this juncture, I would rather look for the right list of stocks that I would want to buy and look for right valuations. And I think there can be a good opportunity to make money.
Dhananjay, so if you're an investor, what is the portfolio advice you have for investors at this stage? Would you recommend taking a little bit of a cash call? Would you recommend doubling down if the markets say correct 5 to 8% from here on? Or just simply take profits and stay on the sidelines and wait for a re-entry? So what I want to essentially understand is taking profits and a cash call. Is that advisable, or you'd stay 100% invested?
No, I am not 100% invested. So basically, I have roughly about 5% as bond portfolio. So I have the 10-year yield at 740 is where I have invested in. So there is a certain amount of buoyancy that can be earned. So I think the bonds can actually do well in the near term. Broadly, I would say it's kind of a light in terms of beta. It's better to be more closer to the index rather than try to look at very high beta in the current market. So that is one thing. I would rather be with liquid stocks and sectors wherein the impact of the events can be much lesser. There are certain value and structural growth indicators or sectors that we are looking at. One particular sector that I look at is the auto space. We are looking at a sustained recovery in the two-wheeler space, for instance. So that I think there is a 2-3 years of runway that we are looking at there. Likewise in agriculture, equipment, etc. So those are specific sectors and stocks that we are looking at.
Dhananjay, I think two sectors that for the last 4-5 weeks they've taken a little bit of a break right now has been defense and railway. Actually, no, pardon me, it's not the last 4-5 weeks, it's the last 1 year actually. A lot more escalated in terms of the buying we saw in the period of Feb and March. And it was being called the election play, right? Railway stocks and then a Jupiter wagon is one that you recommend as well. And so is defense. We've seen some of those earnings. They're impressive to say the least. Do you feel or recommend that, do you have any recommendations in the defense space or the railway space that one could still accumulate at this stage despite those valuations?
No, I think defense has been there in our portfolio for a long time, and we're still overweight on that. So a couple of stocks that we have are BL and HAL. So those guys are doing very well. I think the whole story is, I think this whole geopolitical story that has been there and the way government's been investing in defense is something that will sustain irrespective of this government or the next government, whosoever comes. I think that sustainability will be there. I think with respect to infrastructure, I would say that why Jupiter Wagon has been doing well is because the government has been scaling up, spending on the cargo area rather than passenger movement. So I think the cargo space is actually doing well. There is an expansion that is there. I think there is a switch between the between the road freight and the railway freight in favor of railways, because the relative cost and freight rates are cheaper with respect to railways. So I think that is a kind of a switch that's been happening. So I think the demand out there might actually still be there. So I think that is there. I think more concerning for me would be more investments in roads and all. There can be a certain amount of slackness that might happen, because you look at the budget, the interim budget, the growth in the allocation for railways, for roads has been fairly modest. I think 4 or 5%. So I think I'm bothered more on the road side, and that also is reflected on the fact that the MHCV volume growth has started to decline, and it implies that the utilization of roads have been somewhat lesser. So that would also that would also have an implication for cement sector. So I think some of the infrastructure and defense space, we need to be selective, and we need to know which sectors might actually sustain a sort of a structural trajectory compared to let's say roads, where there might be might be viability issues coming up going forward.
Right. Thank you, Dhananjay. Great talking to you this morning. Yeah. We'll hopefully see you soon as well. A quick mention on the markets at the day's low point. The Nifty has taken out 21,900, 21,885. So at the day's low point on the index, on expected lines, we were expecting it to remain volatile. With the way the VIX was looking, the bears clearly still have some control on the street, and that's obvious with the kind of reading you're seeing on the Nifty. The VIX continues to jump up another 4% as we see it. So those concerns continue to remain. Asia, remember, while Dow had a good close, like we indicated to you in the morning, Asian markets were not looking great. 22,000 had been held on Friday, and 21,900 was important. Not to say that we may not see recovery through the day, through the course of the day, but for now, please remember that it is not looking very good as we see it. Maybe Tata Motors is to blame. The stock is down about 6.5%. The breadth on the benchmark also is quite weak. A quick check on the bank Nifty, which had attempted a pullback on Friday but had failed actually. Let's see if it's doing any contribution. It's contributing to the downside. 0.5% lower on bank Nifty is what we have. But yeah, guys, bears still at grip on the street. It's not looking like we've got any sustained buying or recovery coming in this morning either.
Stop looking at Tata Motors, down nearly 8% now. Tata Motors down 8%, pulling down, of course, the whole Nifty auto.
But even the other 3-4 top losers are down over 2%, which for no reason is not a good sign either.
Yeah, and the India VIX, as you mentioned, is definitely showing a bit of panic
the only one thing, Tamannna, that I would take a little bit heart from is in the last hour, the breadth of the market in the Nifty 50 has gotten better. So when we started off, we only had about 4-5 stocks that were trading higher. Now the number is looking slightly better. So now we've got about 8-9 counters that have turned positive. If that's anything to go by, right? That's a little bit of reaffirmation. But at the day's lower point on the index.
Okay, let's talk about results now. And one stock which has been doing decent is Dr. Lal PathLabs on the basis of their numbers. Actually, Ved Goyal is joining us, the Group CFO of Dr. Lal PathLabs. Mr. Goyal, thank you so much for speaking with us. Let me come straight to what has excited the street, perhaps, as far as your numbers are concerned, which is your margins at 26.53%, better than estimates, and your net profits up about 51%. Tell us where the sort of tailwinds are coming from.
Good morning. Yes, we are happy to announce that the margins has decent margins this quarter. There were 2-3 things which has one is, of course, our expansion overall, which is deeper in tier 3 and below, has responded well. Again, the growth for this quarter is 11%, 11.1%. And if you see, then product mix has also gone up. Our SwasFit in this quarter is the highest, 24% contribution from SwasFit, which is highest ever. So these 2 things has contributed, and plus overall volume growth also, if you see, is inching up compared to last quarter. So we are confident that we are able to sustain these kind of numbers.
Good quarter in terms of higher testing. You've also talked about how your EBITDA margins have been boosted, Mr. Goel, because of sort of reduction in other expenses. Your bundle testing is costing you less. I just want to understand if these two things are sustainable. First of all, the volume growth you've seen this quarter, is that a seasonally sort of good quarter for you? And will you be able to keep your expenses at the same levels?
Oh, yes. I think we are confident to sustain these kind of growth and margin as well. So we are saying, there are two things. One is obviously overall efficiency, productivity, and overall use of technology has given an edge to increase and sustain our margins. Second, this time we had some advantage because we took price increase last year, though in this quarter only 1 month advantage. But I think in spite of that, we are able to maintain those margins, and we are continuing those initiatives which has further enhanced our productivity or overall efficiency in the system.
Well, a couple of things I want to ask you about. Your industry, of course, has low entry barriers and very favorable margins, which are very obvious for all of us to see. What does that mean in terms of market share and intensified competition? I think that is a challenge that even market leaders like yourself could potentially be facing. And also, from what I understand, your volume growth in your key markets has actually come below historical averages. So going into FY25, can we expect any sort of price hikes? If there are any, would you have the ability to do that? And what sort of growth are we working with? Because there is that competition that we cannot, cannot ignore at this stage.
So let me take this price. We don't want to, take further price hike. In fact, our whole emphasis is growing by volume, and that's the intent. And we are, in fact, if you see longer term, last 10 years, our growth in terms of price is less than 2% even. So we don't think we take another price hike. Second, on this margins, we are very confident to, sustain these kind of 27, 26 between these. I think that is the margin we can sustain. So the reason for this growth, which is, our whole expansion, one is into our core geography. And to your point, our dependency on our Delhi NCR has reduced.
Share that you own in your key markets?
Yeah, so that is where Delhi NCR, where we are roughly 34% business, 32% business is coming from Delhi NCR now, which used to be very high. And if you see in rest of North, which is growing faster, and that's where the key is. States like UP is, giving a good response, and city like Kanpur, Allahabad, Varanasi, we are going deeper. And those are the market. Similarly, in East, like Patna, Ranchi. So overall, East, including West Bengal, is firing up. So those are the areas we are going deeper. And of course, in South and West, selectively, we are, expanding where we don't have much in terms of B2C. So white spaces where we are expanding selectively, but going deeper. That is how we are, going in terms of expansion geographically.
Adding any more cities, you've talked about the tier 3 and tier 4. What I also want to understand from you, any new geographies that will be coming up, and this new business, how much will that contribute to top line? A, B, lab expansions. I know there's a long gestation period of that, but anything that you want to update us on, anything that's coming up on stream in the near term or in FY25 first half?
So we are aggressively looking at expansion in terms of network, which is our collection center. So roughly we are adding around, 400, 450 collection center in average for last 2-3 years. This year specifically, we are very aggressive and we are targeting around nearly 1,000 collection center. And most of these collection center will be coming in our core geography and down the pop data, which is like in tier 3 and plus areas. Plus in South and West, obviously West is with suburban, we are expanding footprints further, but not as thin as in North. So there are cities like Bengaluru, city like Hyderabad, Mumbai, Pune, Goa. these are focus cities where we are expanding our network in terms of mostly in terms of collection center. Obviously, we are opening 20-25 labs every year. Those are will continue as it is.
Mr. Goyal, tell me about Swasth Fit. That has been sort of a, I would say a successful product for you, which is your comprehensive fitness test and fitness, product. Tell us what the growth is over there and how you expect it to bring in better volumes.
I think this product has, fantastically, growth is more than the company average growth. And if you see, as I mentioned, 24% contribution in this quarter, which is highest. On a yearly basis, we are having 22% contribution from this product. And I think as the practices, be it from the doctor side, be it from the patient side, are changing, people now opting more and more bundle test packages. And I do see that in future, this contribution may go further. And the growth is also, better than our overall company average.
Thank you so much, Mr. Goyal, for speaking with us. The CFO of Dr. Lal PathLabs speaking on their Q4 revenues. I just want to pull up that stock quickly. Is it doing okay in a market? Otherwise, that is really having a meltdown of sorts. At least Dr. Lal Path is up 7%. Dr. Lal Path, Piramal Pharma, ABB, maybe some of the outliers. But we have to pull up Tata Motors for you and see what's happening over there. Tata Motors, the stock of the morning, and maybe that's what's also contributing to pulling the Nifty down below 21,900 at this point. Tata Motors 7.5% down. India VIX, let's just pull up India VIX, also up about 14% last we saw. And really reflecting what we're seeing in the market at 2105 right now. The volatility in the market very clear on that chart. We'll take a very short break, but on the other side, we're speaking with Shyam Srinivasan of Federal Bank. He's talking about Q4 earnings and more. Stay tuned.
Well, we spoke to Shyam Srinivasan of Federal Bank about Q4 earnings and more. Listen into that conversation.
I'd say fascinating. If you take it in slices of time, the first 5, the next and the next, I think the nature of how Indian banking and how regulations in banking have evolved have been fascinating, right? And we've seen it. Second, we all know technology is driving change. The distance between technology and banking is narrowing, or where one ends, the other begins. It's now we're living it. I recall in the early part of 2000, the decade starting 10, we used to say technology will dominate. Now I think it's become real. So between comparative forces, emergence of new technology and invasion of technology into banking, regulatory changes that are at times ahead of some of the changes and or keeping pace, a lot has changed. What I can say, and I think the bank has come out well through all these phases. And if there's one thing we take great pride in, is we've been fairly scratchless in these years and come out without doing things that have happened without disturbing the furniture, so to say. So in some ways, I feel relieved that we are recognized for being a bank that's credible, consistent, and growing. And I believe that this will be a platform and our calling card for greater success. So yeah, I'd like to believe we've made good progress.
In an era of some cowboys out there, you've been true to the banker name tag. I just want to bring the focus on Federal Bank as an institution now. So what was originally a more old generation regional bank, today, of course, is a pan-India lender. Most of your business comes from outside of Kerala. I wanted to understand from you in terms of the way the business has expanded. What has been a focus strategy for you, at least over the last couple of years, where the world has come out of COVID and things are starting to look a little better now?
No, I think to understand that, we have to go back to what our roots are, right? We have been traditionally very strong on NR and SME, small business lending, small and medium-sized business. That has been the core.
Yeah.
And because of that, we've been deposit rich. And we've done well. So through our expansion phase, we always believed that we must preserve this. And this inherent skill of the bank, we can carry across the country. So if you broadly map the world of remittances or world of NR money coming into India, principally it was Middle East Kerala. And in that corridor, we dominated a large share.
Yeah.
That was and hopefully is our strength yet.
Okay.
But we realized that the non-Middle East, non-Kerala, Middle East, non-Kerala, and any part of that quadrant are all growing quite nicely. And therefore, we positioned ourselves in our expansion into geographies where remittances are and deposits are a large part. So if you take Tamil Nadu, Maharashtra, Karnataka, parts of North, this is where the bulk of the remittances ex-Kerala comes into India. So we created our catchment in these geographies. Yeah. So over the last many years, now we are 1,500 branches. About 900 branches are non-Kerala. And these are all in these geographies. So in most of these states, Tamil Nadu, we are 250 branches now, and the other states have about 150 plus minus. So these have become our conduit for getting non-resident. So the core strength of Federal Bank moved into these geographies. But having